Hey traders, so it's the weekend. This is not the typical market forecast type video. What I want to do right now is I want to try and put together a little bit of a lesson to take something away from what happened on Friday's market activity. I ended up getting a lot of emails during the day from traders, and it led me to believe that there may be a disconnect with some people between different time frames and how to use them and how to make money during the day using different time frames to trade accordingly. So what I thought I would do is just put my thoughts down in a video. It's the weekend. You can watch the video a couple of times. You can leave it alone, watch it next week, whatever you want. It was a tough week. I know for some, there was a lot of money made this week. There was a lot of money lost this week. I understand both sides of the equation. My job, my efforts, is to try and help you put yourself on the right side of the trade. So let's go through a little bit of what happened specifically with the S&P 500, more in particular the SPDR, and how we use an intraday price level or intraday chart activity, intraday patterns with the larger time frames, how we put it all together, how we know what type of trade we're willing to take, what type of trade we're not willing to take, where we're wrong, and all that stuff. So let's get into it. It's not going to be long. My intention is to just give you a snippet of information that you can take into the future and use to your advantage to make some money with. That's it. Now, before we get started, keep in mind that this is the same information that's found in the course at lazyeMinitrader.com. Nothing here is different. I'm giving you another snippet. Many of you that are watching this have already seen 3 sample lessons from the course. This is another type of lesson. So what I'm doing here is just giving you another snippet, but something a little bit deeper, more detailed, and relating directly to something that happened on Friday in the market, and something that'll happen again, and something that'll help you make money into the future. So we're on an intraday 10-minute chart, and you see a line on the chart at 286.38. Now, it looks very easy. I could have certainly put that line on the chart after the market bounced up and rallied away from that number. Certainly, I could have done that. Obviously, I'm going to show you where it came from, and there's another line in the chart that you can't see, and it's important. So, on one hand, what is the market doing? On the other hand, what is the market not doing? Interestingly enough, both are important. What the market is doing tells us something. What the market is not doing can also tell us something. What the market is not doing may tell us it's somewhat buoyant, somewhat of bullish behavior, or the reverse. It depends on the type of market we're in, depends on the trend, depends on a lot of things. But I like to take in as much information as I can, as you already know. And here's part of what prompted this video today. A couple of emails I got from different traders. They were concerned that they never really got a clear signal on the intraday 10-minute chart in order to buy the market down at what should have been an intraday support area. And it was. And you're right, and they were right. There is no traditional trend change signal as we like to find. Now look what happens when we flip this chart over to the hourly chart. What we see here is an event that took place that is of bullish behavior. What do I mean by that? The last red candle down, the last breakdown candle, that high is 287.33. There's the price level I'm referring to. Once price in the following breakup candle got above that particular number, above 287.33, that was bullish at minimum until closed back below. So right then and there, we know that we have a turning point in the market. Not necessarily a long-term turning point, just an intraday turning point. That's the hourly chart telling us that the market has made somewhat of an hourly chart turn. But the problem is we want to buy the market down in this area. We want to buy the market down here at the lows. We want to get maximum profit. We want the biggest bang for our buck, don't we? Of course we do. So let's take it a couple of steps farther. Now, this is the same daily chart that you see in the Common Sense market analysis videos each and every night. And the interesting thing is you won't see these particular trend lines on the chart. There's 2 trend lines and they're close together. You already saw one of them, and I'll show you where the other one is. In fact, the other one, let me do it this way. The other one is at 285.94. What is the significance of those numbers? Well, number one is they both relate to a gap. So think about it this way. One is filling the gap, and one is where the market jumped up the following day and opened higher and continued up. So that's known as a gap window. So if we fill the gap, that's the lower number. That's the number down at 285.94. The number at 286.38 is the window into the gap. Now, when we take it down to an hourly chart, for example, let me just see if I can make it as clear as possible. So the 286.38 is the window into the gap in between 286.38 and the lower number at 285.94. That's the white space in between. It's kind of a dead zone. Generally speaking, gaps are filled. Traders that have taken my course at Lazy Gap Trader understand everything I'm going over here. Those traders that haven't taken the course, you just got a little snippet into the gap trading course, but that's really just a minute snippet. It's not really the foundation of the gap trading course at all. It's just part of one of the things that's taught in that course. But here's why it's important. Let me go back to the daily chart for a second. Let's talk about the bigger picture, and then we'll narrow it down to an intraday trade. So we're coming down off some highs. Again, this isn't the market forecast video. This is a how to make money video. So the market's coming down off some highs, and we came close to, but never actually hit or spiked through the 50-period moving average yesterday. Today, we hit it pretty hard, and they drilled right through the 50-period moving average to a much lower area. What's the next major logical area of intraday support that we should see based on the daily chart? Well, there's really one major area, and that happens to be that gap fill. Now, in the nightly videos, I've been talking about a different gap. That's down here. I'm still confident that the market's going to visit that level. We're talking about an intraday trade. We're talking about where to find intraday support, how to identify it, and how to use probabilities of what's likely to happen in your favor. So it's an open gap. So the market's going to want to run to fill that open gap. So that's one thing that we have to understand from an intraday perspective. We have to believe even if the market spikes through that gap by some amount of money, reasonable amount of money, that it's going to snap back and it's going to get some kind of a reaction in the upward direction off that gap. That's logical. That's going to happen 8 or 9 out of 10 times. You're always going to have that one time or so that the market's going to cut through a gap like a hot knife through butter on a hard sell day, and that just is what it is. But 8 or 9 out of 10 times, the market's going to find support in and around that area. Again, this is the risk business. We have to be aware that when we enter a trade, we're taking some risk. What our job is to take a trade where we can minimize the risk as much as possible, take the trade as close to risk as possible, know where we're wrong, and have a target on the upside, and we rinse and repeat, and that's how we make money over and over and over again. So in this case, we know that this gap, this general area, is support. Now, we go down to the shorter time frame, we go down to an intraday chart, and those traders that wrote me today were right. There was no intraday, whether it's on a 15-minute chart, a 10-minute chart, it doesn't matter. There was no intraday short-term signal of a trend change at or near the lows. There was almost one, and one trader did write me today, and he actually took a trade based on this tail candle, but the issue was it was not at support. Support was close by, but he ended up getting whipped out of that trade that he tried to take on the long side. I don't know if he got back in or not. We did not communicate past that, but I just explained to him at the time that not only do you have a tail candle, but you also have to have a reason there's other chart support in the area. He was close, but he wasn't right on the money. And here, down at 286.38 was the beginning of that gap. Remember, let's go back to the daily chart. That's what's also known as a gap window. That's the beginning of that area. They're going to fill that gap, but on a daily chart, and here's really the reason why I made this video. On the daily chart, what we also know is that from an intraday perspective, a daily chart gap like this one down at 285.94, this gap, it may not get filled the first shot. It may not get filled on the first run down. So now we go back and we look at, for example, the hourly chart, and we see the market coming down very, very hard. It's in a very severely, at least on the hourly and certainly shorter term than that, very severely oversold condition, and we're going to find some support. They decided to find support at the gap window rather than filling the gap. Now, they spiked through the gap window by a few cents, but they never did fill the gap down below 286. Now, part of this comes from experience. And I've read this book before. I've seen this movie trailer before. But at the same time, I'm trying to pass some of this benefit to you. You will see this again and again and again. It's not something you see every single day, but it's something you need to be aware of. And if you're looking at a price level for a trade based on a daily chart price level, but you're looking for an intraday trade that may turn out to be a multi-day swing trade, certainly that happens. You have to be aware that you might have to give some wiggle room to the entry price, and you may not always get the perfect sign or signal of a trend change. Those are some of the things that are taught in the course at LazyEMiniTrader.com, among a lot of other things, folks. And here's the bottom line. It's the weekend. It was a wild week in the market, to say the least. The market doesn't always make it easy when it's ready to make a larger move in a direction, whether it's up or down. In this case, it was down. We were fortunate enough to be on the correct side of the market. While everybody was bullish, we didn't buy the story. We knew where we were wrong. We could have certainly made new highs, but it was not the likely scenario. We had our leading indicators, all that stuff. This is a learning process. You have to invest in yourself. Investing in yourself means you have to continuously learn and learn and learn. And as it relates to the markets, the more you learn, the more money you can make for yourself and your family. If you've taken the course at Lazy E-mini Trader, I thank you very much. We will continue to work hard every single day to try and put all this information together, because it is a never-ending process. There is new information every single day. I'm learning every day. You learn every single day. We never stop learning. The market teaches me something every day. I try and pass that on to you. If you haven't taken the course yet, consider doing so. I know it's not an easy decision. I understand there's several courses out there, and many of you have taken courses out there, and many of you have taken courses that really weren't worth the money. They didn't pay off. I know this goes on. I hear from you folks. I understand what's happening. You're in search of a trusted source of information. I understand that. I can't tell you I'm the trusted source. I can only show you I'm the trusted source. I try and do that each and every day by posting the common sense market analysis videos and doing the best job I can to provide valuable information that you can use to benefit you and your future. I hope you learned something. Have a great weekend, folks. I'm David Frost. Thanks for tuning in.